What is up, team? Chuck with Traders War Room. I'm back at you with another video, and this is your Saturday tech video. And what we're doing is we're building new strategies, developing new plans, learning new skills, all to attack the market. Guys, what I need you to do right now is hit that like, share, and subscribe button. I need you to come along with us on the journey and check the description tab out. Tons of tools and tidbits and all products and services Trader War Room has to offer right there at your fingertips. Without any further ado, let's go ahead and get into it. And what we're going to talk about today is identifying consolidation zones, looking for rejection points so that we can get that plan in motion that we're talking about. So let's go ahead and jump into it right now. Welcome back. Legal disclaimer, this is not financial advice. The content is for entertainment and education purposes only. You are responsible for every decision you make. We want you to have fun, use caution, and always go to war. Guys, I'm not going to beat this up, but some of the services we provide, we have a whole bunch of things that we do all in an effort to grow, learn, share, and make some money. But you can check out everything we offer and explore more at traderswarroom.com. So I hope you check us out and come over there. What we want to really talk about is some trades of the week, guys, because we absolutely made a killing this week. And we had a Microsoft trade right there, $340 per contract, a Google trade. All these were swing trades, by the way, $530 per contract. And the big mamma jamma, guys, the one that made the bank this entire week was none other than Amazon with its huge push. Guys, look at that. $1,450 per contract. And guys, if you want alerts like this, all you got to do is join TWR, and I got 25 other analysts doing their thing. So come and get some with Traders War Room. Join the Discord or the instant messaging alert platform. Bottom line, we're destroying the market no matter which direction it goes. We hope you quit wasting that money that doesn't make money. And we got one question. Are you ready for war? Because Traders War Room is. Without further ado, let's go ahead and get into it, guys. And what we want to talk about is we want to talk about those consolidation zones. And basically, when we're talking about consolidation zones, and I hope everyone can see my screen here, we're going to use shop right now, is when we get the bird's eye view approach, right, we start to notice stuff like this, okay? Yes, we got the down zone, boom, and it comes down, and we can see a couple different consolidation zones. And why do we like consolidation zones? Well, consolidation zones should cue into the investor or the trader is that these are wealth accumulation points, okay? And when we're looking at this, okay, a lot of times we can see a couple really defined accumulation zones. Now, they're not all defined as a perfect, straight across line and stuff like this, but when we start to use rectangle pattern boxes, okay, this gives us a really good idea of what we're talking about. Now, we got this huge spike up, right? And then we start to cool off, but notice we put a rectangle pattern here, okay? We got some decent price action moving up and down right here. All right, this is what we're talking about, consolidation zones. Okay, a consolidation zone where we got bottom levels trading within, say, 67.31 and the top 74.53, and it's doing its thing. Bottoms are coming up, rejecting off the top, coming down, rejecting off the top, coming down. It's consolidating, it's making a decision. It's wealth accumulation, making a decision on what way it goes. And eventually it breaks, okay? It's either gonna break to the upside or it's gonna break to the downside. In this example, it broke to the downside, okay? So when it breaks, what do? Well, we trade the momentum, okay? We trade the momentum and we follow the trend, okay? Now, are there relief days? Absolutely. Down, down, down. We have some relief here. Down, down, down. We have relief here. But ultimately, we keep trading the trend and we push our contracts out to reflect this, okay? A lot of times, if you're playing weeklies, you might get caught in a bullish day like a Friday push or something like this, like you're playing the downtrend here and all of a sudden you get pushed here, and maybe your entry here was is not making the money because of fade and stuff like that. Anytime you're playing consolidation zones, you want to go out. And if you're in shares, fantastic, okay? You have your shares, if you're shorting, great, okay? Shares are awesome, you don't have expiration dates. If you're playing options though, you need to give yourself some time, at least 2 to 4 weeks on the options if you're going to trade off of consolidation zones. All right, you got to give yourself some time so you can do this, because say we bought off of this one, right, it broke to the downside. We need to give ourselves enough time so that we can definitely make our money. If we would have gave ourselves, say 2 weeks, we would have been able to come in here, boom, 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 look, it broke here. Maybe we were like, oh, I don't know if I made the right decision, and the following week, bam, down, okay? Able to make some money, guys, right here. 2 weeks of trading so that we're able to make some money, and theta isn't even a factor because we're definitely pulling in money as long as we're not too far out the money. Now, coming into a near term, let's go ahead and look at shop again as we're looking near term. And we notice that we got, once again, another consolidation. So we hit the bottom, okay? And all we got to do is, again, another rectangle pattern here. Right there, okay? Here's our consolidation zone from here. Boom. We got a top, 41,621. We got our bottom, $30, right? Trading within range. Down, up, rejection. Coming down again. Getting rejected at the bottom, up. Trading within range. Now, when we're looking for what direction to go on this one, again, we're looking for pushes to the upside or the downside, but we can cue ourselves in onto the potential of what way to go by giving ourselves probability lines. And one of the probability lines is inside of your range that you draw. All you got to do is put a 50-50 line in here. Basically, come in the middle. You want to have some meat and potatoes on it, right? A lot of price action where it crosses multiple times. And this looks pretty decent right here around this area. We can come down a little bit, right? Boom. Got some top levels here, bottoms, rejections, all this stuff, right? The line looks good. And we'll go ahead and color this a different color. And so now what we do is we got ourselves a 50-50 line and we start to make rules. Okay, so example, if Spotify were to open, say Monday, above this line, and we saw the bullish movement, maybe we had some indicators with the moving averages, RSI, something like that, right? We could consider ourselves pushing to the call side or a bullish movement, at least potentially coming up to this range for a retest of a previous high up the range, right? If we didn't hit this line and we closed below this one, right, or opened on like a 5-15 minute, 1 hour chart, something, whatever you guys enjoy, then we think the tendency and the probability is high that we'll be coming down at least at some point to try to retest this bottom level which we have. So definitely looking at, and this is what gives us our triggers. This is our trigger line. Boom, trigger to the upside, trigger to the downside, and this is how we play off a consolidation zone. Let's look at one more. Microsoft, right? Microsoft had a fantastic week, okay? Had a fantastic week, and we noticed that we got some trending motion coming in here, right? We got some top level. This could be consolidation zone previously. We lost it, came back down, and now we're moving in range, right? So let's go ahead and draw another rectangle here, and we noticed that we got some pushes here, so let's go ahead and draw from our previous line where we lost it, and we'll go ahead and come here, right? All right, so when we're looking at this, right, here we go, we're trading within range. We come down, doesn't like it, rejection, try to come up, rejection, up, rejection, all over the place, right? We're trading in range between 475 and 442, or excuse me, 275 and 242. Then eventually we broke this area, right? So we got to go to the previous level where we had a consolidation range, where it's here. And we start noticing the levels here. And so we'll go ahead and put a little box here. And we'll color this a different box because this is another level of consolidation before it broke to the downside. We'll color this one a different one so we don't get tripped up. And so we're making rules, right? If we stay above this line, this would be a trigger line here for us because it's about 50-50 between both of these levels, okay? So we'll go ahead and color this purple. So we got something different going on, right? Oops. Purple. Boom, there we go, okay? So we got a trigger line, right? So idea is, if we are to open and we stay above this trigger line where we're at currently, the likelihood of us pushing to the upside, potentially trading back into this previous range and maybe pushing to this potential gap fill here, but 291, something like that, the probability is high. We can look to go long. However, if we open and we open lower, and maybe we open and we close below this trigger line here, we have to think that our momentum is seized and we at least are pushing a little bit going towards the downside. And again, inside of these levels, we go ahead and put our 50-50s, and this gives us our lines of potential resistance points when we hit the trend that we're looking for. Obviously, this resistance point would be about right here at the top because it's already embedded in there. We could put a little 50-50 line inside of there just to give us a little closer look. All right, so there's our lines. So we make rules. If we stay above this line and we open above this line, the likelihood of us at least pushing to go retest this area here and push to potentially retest this previous high that we have over here is high, so we go with calls. If we close below or open below this line here, the likelihood of us coming at least to retest the 50-50 line, where we got a lot of price action going in this particular ticker, is high, and so we can play puts. Now, we don't need it to hit this level, we just need it to go in the direction that we want it to go, okay? Shares are a little different. Normally, I just buy shares to do shares, but if you're buying shares, you're doing covered calls. This is important because in a covered call, you want the premium, and so you hope it doesn't come up to your point on the covered call. You would like it to come down because you're still making a premium off the covered calls. You don't want it to hit your mark. But that is basically how you find consolidation zones within range and making lines off of it so that you can get rejection points. Okay, I hope this helped you out. I get a lot of DMs about this, so I wanted to put this on a video for you guys, a little tech video, give you a little bit of idea of what's going on. And with that said, let's go ahead and go back to the presentation and let you guys go on and have your fantastic day, okay? As always, we want to thank you. We want to invite you to come trade with the Bulls of Traders War Room. See what we got to offer on the website, social media, and traderswarroom.com. About right now, you should be seeing a virtual tour of our Discord server on the top right. Go ahead and click that link and check out what our Discord server has to offer, okay? Fantastic community of like-minded investors doing a thing. We hope to see you over there on the trading platform. And remember, we look at the stock market like a war zone. Stocks and sectors, those are our battles. We do it together as a team. Attack, conquer, destroy, and we're always going to war. If that's something you can get down with and you want to come and join the team, then all I got to say to you, follow me. Let's go to war together. Have a great Saturday. Here's your tech video, and let's go out and make some money on Monday.